All right, so I'm going to give y'all another little futures breakdown here. So this is actually from, or this trade is from 12/4/2023. It's on ES. I'm not sure when I'm going to release this video, probably later in the week. So I'm just giving you that exact date so you can go back and look at it and you can go back and study it. So we're going to talk about ES. This is something that me and my mentees, a particular setup that we were on the other day, it was super nice, super clean setup. And I'm going to explain the reason behind this, okay? So first things first though, on this 4-hour chart for ES on 12/4/2023, we can see that the market structure is indeed bullish on the 4-hour chart overall. So overall, the trend is bullish, but it's worth noting, yes, that we did take out higher time frame buy side liquidity recently right here. So we got this push up, we took that liquidity, and of course we're seeing a pullback as a result, and it came down. And I like to use this mind frame, or this is what I always tell my students, my mentees. Look at it through the perspective. Look at price through the perspective in this scenario, for example, like you're a long. Like you're a long who's in this play, who's looking for higher prices. This thing was breaking out, was making a new highs, and yes, you have again a new bucket of longs that are entering the play on this breakout higher. And where are those longs, guys? Where are they going to keep their stop at? Look at it through that perspective. Put yourself inside that mind frame of a long who's in this thing. It's bullish. It absolutely is bullish right now. Yesterday when this was happening. But here's the deal. It's taking out higher time frame liquidity. So when you take out higher time frame liquidity like that, of course, you can expect a nice retracement in the near future. And where is it going to retrace to? Because it's taking out external range liquidity right here. It's going to seek internal. And in this specific scenario, as we were looking at right here, it was drawn to what? It was drawn to these sell stops right here, okay? It was seeking these sell stops right here. Again, because you can anticipate where are longs going to keep their stops at. They're going to keep their stops underneath of support. So the next level of support is right here. So that's where we were drawing. We had this big flush right here. So we're taking out higher time frame buy side liquidity, and we have this big flush, and we understand that it's going to want to tag these sell stops here soon. It's bullish, but we're looking at it through the lens of liquidity. It's going to want to tag those. And if you go to the lower time frame now, look what you got here. You got bearish market structure right now. So far we have identified where that draw is going to be right here. We understand that there's a big bucket of sell stops right there. That's our draw. Okay. We recently took out higher time frame buy stops, and now this made it look even better. What happened next on this? It created relative equal lows. So we had this big sell off right here into New York session right before equity bell, and it came down and it just barely missed that higher time frame liquidity that I was just talking about, aka those big bucket of sell stops are right there, and it just barely missed it, and now it's retracing higher. But this is what I would tell my mentees on mic: don't sleep on it, because now it actually got even better because we have relative equal lows right here, and the market structure is still bearish in this lower time frame chart. Look at this big displacement right here. That isn't some small displacement, guys. That's a big explosive move into New York session, and that set this trend going into it. And it's been trending lower all throughout London session as well. It's not showing any signs of strength. So my advice, believe it. And then we have a clear drawn liquidity right here. So we see this retracement like right into equity bell. I'm not convinced, because as we see a lot of times, the first run, 9:30, is prime time for fake runs. It's prime time for that fake run to occur. That's what I was anticipating, because I understand I have that higher time frame outlook. I understand that we have this draw right here. I understand that the market structure is bearish. And also another thing, on this push up, what did it enter on this push up right here at equity bell? What did it push up right here? It pushed up into a premium marketplace. Take your Fibonacci from that high to the low. That is one price range. Notice how it pushed up above 50% equilibrium with that price range. That means it moved up into an expensive marketplace. So think about everything that I've told you thus far. We've already identified our drawn liquidity right here. We understand that there's a big bucket of longs there to keep their stops right below this level, because it's a level of support. And longs keep their stops underneath of support. So we can target that level of support right there. We can target that level to take it out. And we have also identified that the 1 hour, the 15-minute market structure is bearish. So we are aligned with that trend right there as well. And we have also identified the 9:30 push up fake run. And we have also concluded that it moved up into a premium marketplace and an expensive marketplace within this price range right here. Okay, because you can see what happened. We got the surge lower. This surge lower took out external range liquidity. Look right here. Look at my cursor. This was that big displacement. It came down and took this low right here. That was external range liquidity. But then it comes down. It leaves relative equal lows to take this little sell stops right here before doing so, but it didn't take out the major level. It's still external range liquidity. And now it does what? It seeks internal range liquidity in a premium. And now that it's seeked that internal range liquidity in a premium, it's an expensive marketplace. It's completed its objective. We got relative equal lows. It can now move lower. But I was looking for one more thing. Before I looked for it to clean out those relative equal lows. The confirmation signal, the lower time frame shift. Kind of think ICT, because this is, the influence. You can clearly see the influence. This is ICT 2022 mentorship. Look at this right here. You get the push up into that imbalance. It's pushing up. It's pushing up. It's pushing up. It's consistently putting in higher lows. Look right here. Higher low, higher low, higher low. And I'm not convinced by this push up. It's a very lethargic push up as well, right above relative equal low. So I'm not convinced in the slightest that this thing is going to hold. Not in the slightest am I convinced. So now I'm just looking for a reaction, because now at this point it's moved up into a 15-minute premium. I'm looking for a lower time frame shift. I want multi-time frame alignment with the 15-minute. Right here we get our shift confirmed. And just so you can see that I'm not doing all this in hindsight, everything I do right here, guys, it's all posted in the 1% Club, my mentorship group. And you can see this is the setup right here. ES confirmed short setup here, came up premium on the 15-minute range, rebalanced at price action. Now you got a lower time frame shift. So that was a confirmed setup for us. And then you can see it pushing up into right here. I said ES confirmed short setup. There's a setup. Here's the fair value gap. See that? You also got a breaker block in here as well. I don't think it quite hit the breaker block, which it didn't really need to. It was already in a premium anyway. But it's basically another added layer of resistance though. Why is this a breaker? Well, actually, I made a video on the breaker blocks, and I'll actually leave a link to that video for anybody who hasn't seen it in the video description, the video on breaker blocks. It's a very, very nice concept. Again, another concept from the ICT library. But in simplest terms, like we got this push up right here. It looked like it was going to make new highs, and then it pulls the rug and it has this big sell off. So this was that last low that was put in right before you got that surge up to take the high that makes that breaker. And then you get the shift. The shift is essential as well to having your breaker block. You got to have that change in trend. So then when price returns to that area, longs want to mitigate their position. So it comes up into a premium, taps into that imbalance. And at that point, it's already valid. Because look, take your Fibonacci from high to low. See how it moved up above 50% equilibrium? That's where you get your entry at, right there. Stop would be above this high. And profit target, it's up to you, because we all got kind of different styles here, but you can shoot for this low right here. Or you could shoot for this low right here, and I made that very clear. Okay, if you shot for this low, you could just took the low hanging objective, boom, hit a simple 1-to-1. There's nothing wrong with that. Sidewit you hear so many of the gurus say, I promise you guys, you can clean up with a 1-to-1 risk reward ratio. Those low hanging objectives, they pay. Okay, there's nothing wrong with a 1-to-1. But if you do like better risk reward, that's available to you as well. I'm not saying, because I know like certain styles, it fits certain people better. And some people, they have to have bigger, like much bigger winners. Well, guess what? If you keep your stop above that high, which is right there, you get in at a premium and you target this low, which is valid. That's 1.70, so that's decent. And almost 2-to-1. Not quite, but almost 2-to-1. I could have swore it was more than that. I made a little typo on my Twitter the other day then. I said almost 3-to-1. I think I was thinking of something from the other day when I was saying that. Because no, I mean, it wasn't near 3-to-1, but it's still really good risk reward, as you can see. Solid play overall, and you can see it did not take it long at all, and it cleans it out. Beautiful play, and it doesn't get simpler than that either. Like you didn't see a lot of moving parts when we were talking about this. It's very simple price action, and that's the best way to do it. Okay, because simple systems are easier to execute, and that's a key fundamental part to building that psychology as well. Okay. Simple systems are essential. And yep, I mean, that about wraps it up though. Hopefully you enjoyed this little breakdown. If you did, leave a like, subscribe to the channel. I'll catch you later.